Okay, for this video, I wanted to cover the Roth IRA contribution limits for U.S. taxpayers. So Roth IRAs are individual retirement accounts, and individuals can contribute to a Roth IRA if they meet certain income levels. So they have to be below certain income thresholds, otherwise they're phased out or phased out completely. And they also need to be mindful of how much they're contributing to their other retirement accounts. So one of the main rules to remember is that individuals can have both Roth IRAs and traditional IRAs, but the contribution limit applies across both of them. Okay, so Roth IRAs are accounts where contributions are made with after-tax dollars. Traditional IRAs are generally pre-tax dollars if the taxpayer can take a tax deduction for the amount of cash put in. So what I mean by that is when you have a Roth IRA, under every circumstance, if you put money into a Roth IRA, there is no tax deduction for the amount you put into the account on your return. Now with a traditional IRA, depending on what your income level is, if you put money into a traditional IRA, you can take a tax deduction on your Form 1040. Now, in certain cases, if you make contributions to a traditional IRA, you won't get a deduction because you make too much money. But at least there's still that option there, whereas with Roth IRAs, under no circumstance are you ever getting a tax deduction for putting money into a Roth IRA. Now, like I said before, a taxpayer can have both a Roth and traditional IRA, but the contribution limit is combined across both. And so for 2021, it's capped at $6,000 a year. You get an extra $1,000 if you're over 50, right? So if we look at this example here, we have John. He's a single filing taxpayer and he earns $55K a year. He wants to contribute to both a traditional and a Roth, right? He's allowed to do that. So John puts $4K into his traditional IRA, and then he wants to put another $5,000 into his Roth because he's thinking, oh, I get $6,000 per account. No, that's not how it works. The contribution to his Roth is going to be capped at $2,000 because he can only contribute $6,000 across both IRAs. So he can put $4,000 into a traditional, he could put $2,000 into the Roth, and then he's fine, he's ready to go. And so this is the current Modified AGI threshold for Roth IRA contributions for 2021. If you'll notice here, like let's say the single filers at the bottom here, single head of household, married filing SEP, not living with the spouse. If your Modified AGI is below $125,000 per year, or for that year, you can contribute up to the limit. So you can put up to $6,000 in your Roth. If you start to make more than $125,000 but less than $140,000, there's a phase out. So if $6,000 is the max contribution to a Roth IRA, you might only be able to put in $3,000 or $4,000 depending on how much your income is between this. If you make more than $140,000, you're completely phased out. So you can't make a contribution to a Roth IRA under any circumstance. Now, if you're single and you're making more than $140,000, Roth IRA might be off the table, but you could still use a traditional IRA, right? So traditional IRAs, there's really no phase out whatsoever as far as who can contribute to it, but there might be a phase out as far as the deduction, depending on your income and whether you're covered by a retirement plan at work. So I have a separate video for traditional IRAs. I'll link that below. But for Roth IRAs, these are the main points to remember. Contributions are counted across both traditional and Roths. And if you want to make a contribution to a Roth, you need to carefully assess what your Modified AGI is, because if you fall above or within some of these thresholds, you're not going to be able to contribute at all. Okay, so very important to remember. All right, so that covers it for this video. Thank you for watching. If you have any questions, leave me a comment below, and I look forward to seeing you again on the next video. Thank you.